Because end of the year and a start of a fresh calendar year traditionally means pretty low activity overall for what's a relatively small uranium market. The past weeks have proved no exception. December 22, one of the quietest months for spot uranium in many years. However, we've got the dynamics changing. We have market liquidity drying up, government approvals for nuclear reactors on the rise. So is the stage set for a significant movement in price for uranium ahead? Keith Bowes joins us from Lotus Resources to just get us across the latest, because Keith, one thing that I can say is that it's hard pressed to find a more dedicated group of followers than those who like uranium on Twitter. I mean, they are all in. Tell us what you see as the main drivers of price dynamics right now.
I think there's been a few things that have happened over the last year, specifically with the introduction of the spot fund last year, had a significant impact in terms of driving up the spot price. We saw a higher spot price in April of last year, so that we reached almost $64 per pound compared to the existing or the current $50 per pound. And I do think that, as you said, the market's a very, very small market. It is a very opaque market. And I think in some way over the last year, we've actually been a little bit of a victim of our own success, in that previously the uranium market ran to its own tune, let's say. It had its own fundamentals behind it and it ran to its own tune. But because it's been so successful over the last 18 months, it has fallen more in line with the rest of the commodities. And I think that's what happened in April of last year, in that it rallied up on the initiation of the invasion of Ukraine by Russia, but then it followed all the other commodities in drifting down. Now, what we're seeing in the market at the moment is that a lot of the utilities, who of course are the final customer of the uranium that any operation produces, have been very, very focused on the back end of the uranium fuel cycle. So that's in the manufacturing, it's on the enrichment, and it's on the conversion. And I think they've been working really hard in terms of getting those in place, such that they can then move this year into more contracting with regard to the actual uranium, the yellow cake that a company like Lotus produces. So I'm expecting to see some significant movement this year as those utilities come into this market to buy up the uranium that they need to fulfill their conversion and their enrichment contracts.
Yeah, okay, so that is demand coming from essentially the nuclear industry, the energy industry as well. What about the Sprott, the physical trust that really sort of set the market on fire last year? I mean, that was very influential over the price of uranium from, my recollection. So what is the deal when it comes to the Sprott physical uranium trust buying on market?
Correct. So Sprott has been an absolutely huge player in terms of the spot market over the last 18 months or so. They've purchased something in the order of around 60 million pounds of uranium over the last 18 months, although the majority of that has been at the front end of those 18 months. The last few months, the Sprott fund has bought actually very little uranium, and that's effectively due to they're currently trading at a discount to their NAV, which means they're unable to go into the market to raise any more funds to buy any more of the uranium, to buy any more yellow cake at this stage. So that's what's holding them back at the moment. So theoretically, we need to see the spot price go up a little bit more so that they can trade on a positive to their NAV, allow them to go into the markets to raise the money to then buy more uranium, which would hopefully drive the price up more. So they are a very, very significant player in the market. Unfortunately, they've been very, very quiet for the last couple of months because they haven't been able to raise the funds to buy the uranium. And I think that's had some impact on the price moving forward as well.
Okay, so those are some of the dynamics in terms of supply, but just a little bit more on the demand side equation, if you don't mind. How significant in the market is China? I mean, we talk a lot about the EU and the push for green energy sort of in Western companies, but what about China? What about India? What's demand like from those two countries?
I think you've picked the two countries that probably have the biggest impact on the demand going forward. I mean, China at the moment is building, I think they've probably got about 12 or so reactors under construction at the moment. The way they're talking and the announcements that they've made, they're planning on building 50 new reactors over the next 10 to 15 years. So they're talking about 10 to 15 new reactors every year coming online. I mean, that's absolutely huge. They'll become the largest consumer of uranium within the next couple of years, overtaking the USA, which is currently the largest consumer of uranium. The USA has about 90 odd reactors at the moment, and China will be overtaking that in a relatively short amount of time. As you mentioned, India also very, very large growth potential there as well. The Indians have announced in the last couple of weeks that they plan on building 10 new reactors over the next 10 years or so. So again, we can see significant growth coming in from India as well. But as you've mentioned, that's not the only story. India and China are very, very important. But we're seeing Japan as well talking about bringing their reactors back online again. You're seeing the positive sentiment coming out of South Korea as well, and what they're planning on doing, and hopefully going out and actually building new reactors as well. Europe and the USA and Canada are also very, very important. But I think one thing that probably the market hasn't quite got its head around, and I don't think it's been reported in any of the future demand numbers that we're seeing out there, is these small modular reactors. I think the small modular reactors are likely to be the biggest growth area for the nuclear industry moving forward.
Yeah, it's fascinating technology. And look, I don't mind saying, I hope that we have a real conversation here in Australia about nuclear as well going forward as we try to go clean and green. But let's talk about Lotus for a sec. You've got a uranium mine in Malawi, which has been in care and maintenance since 2014, of course, because of price. So when do you anticipate you'll be able to get production up and running?
So we acquired the asset of Paladin back in 2020, and we've really been focused on the last couple of years in terms of really setting the operation back up to become a lower cost producer. One of the issues that Calicara did have when it was operating previously, it was a relatively high cost producer. And we've recognized that there's a number of new technologies out there at the moment that were not available back when it was operating that can have a significant impact on its operating costs. So we've been working on those different areas, and we've actually put those together, and we presented a feasibility study to the market back in August of 2022. And on the back of that, I think we've clearly demonstrated that Calicara can be a lower cost producer, but very, very importantly, has a very low capital for a restart operation. So we think we've got the technical work put away. There's obviously some more things we need to do, and then obviously make the final investment decision and going through the execution phase. But our focus at the moment is really around conversations and negotiations with the various utilities for offtake. And also we're busy with negotiating what we call a mine development agreement with the government of Malawi that allows us to set the fiscal regime in which the project will work. So that's setting the royalties, setting the taxes, and all those types of things to make sure that we have a very, very economic project moving forward.
Yeah, so I mean, it's tough, right, to be in the phase that you're at, waiting to make some of these major decisions. If I'm an investor, though, am I more focused, as a Lotus investor, I should say, on the price of uranium, or am I focused on what key catalysts that might come first next?
I think you need to be focused on the catalysts at the moment. I think those are absolutely fundamental. And as I mentioned, we do expect to see some movement on the yellowcake price this year due to the fact that the utilities will be moving their attention away from their enrichment and their conversion contracting into their offtake on the yellowcake. So we see that as a key catalyst. We do know that there's been a significant movement in the yellowcake previously. It moved up from, I think, probably about a year and a half ago, just before the SPUT fund started up, was trading around the $30 to $35 per pound. We seem to have stabilized at around $48 to $53 per pound, and I would expect to see another step change this year as those contracts start to come through with stabilization. So for any investor out there, I would suggest we start looking at some of the things that are going to come up in the coming year. I think those are going to be absolutely critical to where the spot market's going to be.
Okay, and I know that you said that you've got pretty low capex to restart production, but still final investment decisions need to be made, etc. So will you need to go back to your shareholders and ask them for further funds to take this project to its next phase?
Correct. At the moment, we're looking at around $100 million to be able to restart the asset back up again. How are we going to fund that? It's probably going to be a combination of equity and debt, but we have had some interesting conversations with various offtake partners where there's a potential to do some prepayments. So they would prepay for some uranium production that we would deliver at some time in the future. And that's also an attractive option for us as well. So we're considering all of those. And we do also recognize that the financing negotiations are linked to our offtake negotiations as well. Any significant debt which we take in, we would naturally want to have offtake in place to be able to cover that debt. So the two exercises are actually very, very closely linked.